Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day and trading week, retail trading team. This is Master coming to you live with your routine briefing, and we are gonna see what we got cooking in the market today. Before getting too excited about the briefing and warm up, let's see what the lovely market's offering us to start the day here. And I'm just kind of updating my daily and weekly charts. We are still consolidating around the bottom of this range, so I'm not too I'm not in a rush, we'll say, to get involved today. So that's what we got going on here as we just kind of wait around and update our pretty little charts, putting in that opening range there. Let's take a look at this longer term chart in just a second. The pretty lines, and we'll talk about what's on the board here. Okay, so you can see levels are a lot closer. So I'm gonna go through this warm-up document since I get a wider view of the overall pattern here, and you'll see that we are getting a bit closer in those levels, which is good. Lots of stuff to trade around, especially for day traders. Unlikely that we're going to break out one way or another before getting through the top or bottom of this level cluster. And like I said, it'll give us nice and clear levels. So I'll put that in the warm-up document in just a sec. But let's take a look at what we got going on overall today. What did I just do there? Okay. So what I am looking at today, as I did some more back testing over the weekend, you can see the results of some of that. If you go to that warm-up document, you go along the bottom there, you go to that Occam trade log. It is quote-unquote finished, but there's still several days I want to go back over, specifically January to early March, and I am still just trying to tweak everything before I put the good old finished note on it. And you'll know it's finished when I delete all the other stuff on the bottom because I'm comparing various data from other backtests as well. So if you want to see what I'm doing there, that's in that warm-up document, which I'm going to start updating here in just a second. And then if you want to follow along with the mechanics, which I'm also still ever so slightly tweaking, if you go to that routine day trading document in the resource folder, you can see it there. And we are looking at Occam. And anyways, minor digression, what I am looking at today, so I'm going to go ahead and get rid of the volume profile. I just had that up there. If you look at that warm-up document, you can see what's going on. We're kind of testing the bottom of it. So if you go to that document, I'll just bring it over here real quick. I'm just looking at that behavior. That's what I look at pre-market, but when it comes to actually trading, I do not trade around that. It just kind of gives insight into what we can expect for the day. So we'll go ahead and get rid of that. and we're going to be looking for these patterns. I keep trying to get to it, so now we're finally getting to what I've been trying to say for 5 minutes, and that is throughout the back testing, if we look at specifically these patterns or these candles at high or low of day, it seems to give us the best results. So we'll keep watching what happens with this first 15-minute candle. Potentially, we may see one of these setups appear, but really, if you look at the tape, you're not seeing one of our core setups. We're just kind of middling around this range, and no rush to get involved as a result. So it's kind of why I'm just hanging out and chilling, not really looking for the opening bar trade. And while we're chilling, let's actually do that warm-up document. Okay, so if you want to follow along, that is in the description to this video. If anybody's even watching, I can't tell if anybody's watching. So if you're watching a review or repeat, whatever you want to call it, rerun, we'll say this is completely irrelevant to you. So anyways, I'm going to go ahead and get this thing updated. So looking at first the inventory from the overnight, it's really neutral. So if you go to the last day of the week, we kind of ended somewhere around here. We kind of opened somewhere almost the same exact spot that we closed. So very easy look. I got to sign in here. 1 second. Okay, now we can update our lovely warm-up document. So neutral implies balanced. Open itself, open rejection reverse. And if we pop back through here, we'll change that to open auction. So if you want to read more about those opens, you can click on that link. I have a little LinkedIn post on it, and that will tell you what to expect for various opens. Long story short, choppy open often leads to a choppy day. No surprise, again, we don't have any of our patterns. We are pretty balanced. Again, if we want to just take a look at that profile real quick, even just looking from the low that we put in earlier last week, you can see we're hanging out right at that POC, just completely balanced. And again, why I'm in no rush. If you look at those rules, the number 4, strong reaction to the POC, disrupts number 1, which is that if price accepts into balance, it's likely to test the other side. It usually retests the nearest extreme first. Long story short, you want to avoid trades near the POC. And I did not know that we were actually right at the POC, but no surprise given the lack of enthusiasm in the tape for today. So something else I was looking at this weekend is looking for these patterns relative to the other underlyings. So there are 3 or 4 liquid underlyings that I think are day tradable, and this is based on some taste trade research that came about a while back. I don't remember exactly when, but the underlyings are /6E. That is the euro. That is one that I'm not too interested in. Just having traded it in the past pretty successfully. The thing is, though, once the day starts here, I think it's a little more erratic relative to the overnight session. So I'm going to look at it a little longer before completely dismissing it because it does have the liquidity, but I'm not so excited about that one. /CL, which is oil, and its pair friend will say /NG. Oil, one of the most day traded futures underlyings, obviously a strong potential there. Natural gas does not have amazing liquidity. It is kind of a large product, and the stops can be a little difficult. So that's why I said tentatively on that one. Probably more looking at the oil there. And then obviously the SPOOs, NQ, RTY, and finally maybe bonds as well, /ZB specifically. So looking for these patterns in those, again, this is why I said I need to put that rubber stamp on the back testing before completing it, because what I've been looking at is just NQ alone. And NQ alone is very strong, yet there are some days where you kind of force those trades. And so what I've been looking at on the as I do each, especially those days that are not so strong in the /NQ land, do you see those same patterns arise in these other liquid underlyings, be it oil, be it bonds, be it natural gas? I'm not so keen on natural gas because of liquid issues described earlier. Yet in terms of oil and bonds, for example, there do seem to be some days that are days kind of like this in the NQ where not much is going on, really not strong risk rewards in terms of the setups, and those days are better in, let's say, oil or bonds. So just something to think about if anybody is watching this and has an opinion one way or another. I would be interested to see that, um, particularly if you've looked at those back tests and can confirm or deny my suspicion there. So trying to pull up ZB here, see what we got going on there as we kind of wait. Some people like UB, again, it's a bit of a large product. Some people like ZN, bit of a smaller product. But let's just see. I don't actually know what's going on in the bonds today. So I'm just kind of seeing if there's a pattern potentially sticking out here. I'm not really seeing that either. Well, actually, so if we look at, I'm going to name these as mentioned last week. If you go to the, we'll call it pattern D for now. I'm calling that a supply grab. So if you look at the supply grab trade, we actually had potential one develop this morning. So this would be the level here, 2 tests to push through, and then a rejection. You get that nice candle 2 right there. What time was that at? That was before open, but even at the open, you had the continuation candle, candle 7, and there you go. There's the trade. So potential. I still want to test this before getting involved. I'm very happy with NQ's performance. Yet I just noticed that as I was going through stuff this weekend, that if you focus more on the patterns and less on trying to force the underlying, there is a lot of good potential. So, and again, keeping that I don't know what my drive is. Keeps getting confused with my YouTube. Okay. Keeping that 11 o'clock trading window, 9:30 to 11 across the board as well is super important, I think. And that's kind of the issue that I was talking about with the euro, is it does need to perform a little better pre-market, so maybe something to look at there. But again, I want to keep going through these back tests, get it all hammered out. We have something that works very well, as you can see from the results, and it's just about making it the most fun and easy to trade. So I had 2 bad days last week, 2 great days. So the great days made up for the bad days. However, those bad days, especially the one, I think it was Friday, either Friday or Wednesday, uh, very clearly not going to be a good day. I know it's Friday because if I go back to the chart here, I was talking about how you have the kind of the battle of that inverse head and shoulder, quote unquote, versus the potential head and shoulder. So that's not astrology. That is just pointing out when it's something super ambiguous to the chartist's eye, it's going to be ambiguous to everyone's eye. And you saw Friday, so if we just look back, ignoring today's action, when you were looking at it Friday, you just knew it was going to be a difficult day. And if you looked at oil on Friday, for example, it was much cleaner. So that's just to illustrate my point there. And we're going to complete the warm-up document as we do so. I'm watching this candle as well, by the way. I will get involved on the long side for that continuation move. Get a higher high here. So let me just make sure my orders are filling. Across the board, stand by. Great. We're going to get involved here with a higher high. And we are playing this candle. There it is. So we're going to give it some room. Good amount of room, 67.25, which will take us to the top of that fun little line right there. Having issues. Enter this. Weird. Stand by. I gotta make sure all my things are copying correctly. A bit more risk than I'm interested in. All the way down, all the way to the bottom of that range. We'll see. Here. Okay. So I'm going to leave that there for now. I may adjust that stop. Like I said, that is super wide for our volatility. So I'm going to get this warm-up document done, figure that out, especially as we test this 100 area. They like to revert a little bit from there. So we got going on. Again, if you want to follow along, description of this video, 20.4. So the Russell is outperforming today. Had that on my radar. Pull up these charts and see where we are. Good morning, Mr. Ernie. I am trying to figure out my plan here. My standard stop on this trade is quite substantial. So I'm trying to see if there is a better spot to put it. Given the profit target is also substantial, but especially given the Russell outperformance today relative to the NASDAQ, I'm not sure we want to be going for heroic stuff on the NASDAQ. So I'm looking at here, just kind of getting the QQQ levels. I'm in that warm-up document. Pretty good. I just got this one trade. Seeing what happens. If they want to squeeze them real quick and give us a large win to start the week, that would be more than welcome. But just in case, I'm getting all the levels in here. So 373, 355. What you got going on today, Ernie? Oh, very nice. Very, very nice. Yep. 4404 is that major level there. So there's a trend line here that NASDAQ has to confront as well. Stop up. I'm looking for that climactic push on the NASDAQ here, and I am going to exit a little early. Or I'll do the responsible thing and just move up the stop. Or it happened across all the accounts. Slept in, so you slept until 2:30 a.m., huh? Ah, wow. Man, you almost got beat by the sun today. So yeah, those levels are updated for the Qs in the warp document, and we're good to go there. Bullish open rejection reverse. Everything else neutral. Internal super strong today, so we do have that potential for that trendy look. Keep that in mind. Watching what happens at this trend line here on the Qs, and we're gonna look at some other underlyings. I was talking about YM is lagging, interesting, especially relative to the Russell. A little earlier, Ernie, I was talking about. So what I was doing this weekend, I was going through the back test, and I was looking at the bad days, and obviously the bad days they had either kind of what's going on today, it's working today, but it was a pure candle play. So the candle plays are okay, but they have the lowest win rate, and usually they also had no. Well, so I'm answering that question. As of now, yes, I haven't opened any trades in this, but if you look at the bad days for my NQ strategy, if you look at and you then look at other liquid underlyings. So I was just glancing a little bit at /6E, /CL, /NG. I'm not sure I trade NG though, just because it's so big and the liquidity is not the best. And /ZB. Very often, one of those would be showing a very clear pattern on those bad days in the NQ. So what I'm talking about are these either these patterns at the higher low of day. So the trade I took today, for example, just that number one continuation candle, which is the weakest trade. Anything continuation is just the weakest. And let me move the stop up here. I take profits right there. But yeah, so if you on the weekdays in the NQ, for example, if you look at those underlyings I described, they had one of those key patterns for the most part. And so I'm thinking instead of being so fixated, yes, hogs. I would love to trade hogs. The liquidity is unfortunately just not there in our friends the hogs. What was I saying? Um, Stand by. I'm actually just going to drag the stop up. They're going to give us a trend day. Yeah, I totally lost my train of thought there. But yeah, point of the matter is I'm going to start looking for, opposed to trying to squeeze a juice out of a given underlying, looking for a pattern. Good enough. We'll take this. 50.75, they give it to us. There we go. So Make sure everything's flat. Good day. 1,060 across most accounts, 1,040 across the others. Cancel all working orders. Pretty cool. Obviously, it's those simulated accounts, but not simulated. It's those PAs I'm trying to get funded. Those remaining 19, but that is what 19 times 1060, 1060. So pretty cool, pretty cool. Now losing that, obviously is going to be 250% more painful. So we're confronting this trend line here. My day is finished. The easiest, luckiest day in the world. Like I said, that continuation candle is usually not that easy, but we'll take it. Take it. Where do we close? Seemed to be quite the fortunate close if we do turn around here. That top tick so far? Pretty much. All 19 at once. Yes, sir. Yes, sir. I'll give you a little peek see what we got going on there. I gotta hide the account numbers in case somebody else looks at this. Let me make sure. Yeah. Okay, so we have hackers. Everyone always hides the account numbers, so I guess you're supposed to do that. That one too, then. Stand by. Okay. Check out all this fake money today. There you go. I'll guess net fees. So almost 21 on the dot. Fake money. This is just those qualification additional 19 evaluation accounts that I'm trying to qualify here, but someday it'll be real money, assuming I don't blow them up. So pretty cool. All right, that looks like the potential exhaustive push there. Also pulling back a little. I'm going to go ahead and switch to trade simulation mode. On here, let me just do my cute little picture for Twitter. So I'm doing the $5,000 account drawdown Ernie, so it has to get 9. So 8 more days without losing, and also making 1,000 will will get us there. But yeah, so it's you got to make 9,000, and then you can pay to fund them, which is also I'm probably not gonna fund all 20 at once, or I might. I haven't decided if I want to spend $6,000 to do it, but you have to spend like $300 lifetime fee to fund it, and then you never pay anything on them again. And then you have to make 5,000 per account, or I think it's like 5,010 or something. So you get that trilling drawdown to 155 and $10 or whatever it is, and then from there you can start taking withdrawals on all the profits you make. Your first 25,000, I'm using Apex. Your first 25,000 is all yours, and then they start taking 10%. But really, 10%, in my opinion, is a steal. I remember reading the S&P Capital book, and it was like they split it 50-50 or something. So yeah, we'll see. We'll see how it works. I only have the one funded so far, but when the other 19 are funded, and if it works as it works on paper, it's something. And I've told this to Uncle Dan a million times. I wish I'd known about this, I don't know, 5 years ago, because it's just a much easier way to make money. I'd much rather lose fake money than real money, especially in one account. So even, you know, I don't know how much I've made trading futures, a decent amount, but it's only been across that one account. So you multiply that by 20 and it's well worth 10%, I think. So that is my spiel for today. Once I have them all funded and stuff, I will definitely be going hard, assuming it works as well as I hope it does, just because it removes the barrier to entry for anyone. Like, you don't need 20 accounts to start off, but even if you have a few, two, heck, one's obviously a good start. It's definitely a life-changing way to navigate your finances. So, and it lets you do another job as well. So, just for example, if you're doing what I'm doing, which is just this 11 o'clock sesh, and then if the trade works, stopping, then, or even if it doesn't work, if you're just doing what I'm doing, it's 9:30 to 11. Well, the rest of your day you can do whatever. So. Oh, really? I didn't. Okay, I didn't know when it started. So yeah, I mean, it's one of those things. Like, whenever I talk about it with people, I'm like, it looks great, but it definitely seems like one of those things that's too good to be true. Um, too easy. So I'm trying to figure out what the catch is. I haven't found it yet. I think it's just all that qualification up front. But end of the day, if that's it, then it's quite a special opportunity. I mean, yeah, there's no need to start big, um, at all. I just figured I'd pick up the remaining 19 because they had that 90% off sale. So might as well do it now sooner rather than later. I did finish my back test as well, so I definitely have a lot of confidence in the system. I know that even now, which is not in its optimal form, it's made, I don't know, something like between 50 and 60,000 per contract so far this year per account. So, do the math. Even if it performs half that well, I'm perfectly happy with that. Yes, yeah, definitely, definitely. So when I was first getting that, when I first started this, I was going the route of, 17 contracts is try to get the thing funded, and then you can worry about the system. But I don't know, I blew through like $300-400, something like that, just because I kept just, oh well, you just get the reset. You can just get the reset. But that's not the way to do it, because like the slow and steady thing. That's how I got the real funded account, just the slow and steady approach. And on top of that, it builds bad habits. And on top of that, cool, you can get this thing funded. But if you have the real account and you don't have that system, you're going to blow it up. So let me see, I think I had 3 or 4 accounts before I had the funded one. I blew up, I think it was, I think it was 2 of the 3. I don't really remember. But anyway, point being is I blew it up because of the profit stop. So the way that these work are, I'm sure you know this, Ernie, but anybody else who may be listening, if there is anybody else listening, is you have a $5,000 trailing drawdown threshold. And what that means is 5,000 from the high. So the reason that, I'm really big on the adding to winners, that's what I do in my personal accounts. I just try to take advantage of those trends. But if you're doing this account, you can't do that because, well, maybe you can. I haven't figured out how to make it work because of that trailing drawdown. So let's say you're up, and this happened to me in my first account. I was up 80 something. I want to say 8,500, but it was between 8,000 8,500, and because I caught this really this big run. But what happened is then we pulled back, and I'd added a zillion contracts. So we pulled back I think 3,500 from that high. And so what that meant is I only had a $2,000 drawdown from there. And that account blew up because then I lost a couple trades, and that's just the system. But because of that trailing drawdown, it trails into profit. So that account blew up at like, I don't know, 154 or something. So 4,000 something dollars in profit, quote unquote, but because of that trailing drawdown. So yeah, long-winded way to say agreeing with you, Ernie. You have to be disciplined, and you have to have a system that is mainly just focused on these little snipes. So that's why today it looks like it's going to be a trend day. I'm looking at all the internals, very very strong, looking like we're going to probably have a trend day. But I just took profits at a high, so 38.75. Didn't top ticket like I thought I did, but somewhere around that high, just because I want to keep that drawdown as little as possible. So yes, we are turning around here, but let's say we exploded another 100 points higher. I only caught 52 points of that. So then you're like, well, Gary, then you left another $2,000 on the table. Yes, as my microphone turns off, but you got to mind that drawdown for these accounts. So yeah. Anyways, I digress. Yeah, Ernie, you're 100% right. They make all their money not on the accounts, not on the people 10% taking 10% of profits, not even on the activation, but on those resets. So they often run sales on resets, even when they're like $30. That compels people like myself in the beginning to like, oh well, what if I blow? You know, I want to get these accounts funded, so who cares if I blow $60 on two resets? Well, you do that across. I think for this their most recent competition, they had like 300,000 new accounts activated. It's just huge money. I was talking with Juice Ball, and he mentioned this. I'm like, well, that's actually quite a good idea. He said, if you could have a business where you're just doing exactly what they're doing, that's a huge money making business. It's all paper money. So until you have those funded accounts, and even when you first start off with the funded accounts, you're not even playing with real money. So they're just putting on paper, and you're just paying them to basically trade in a sim. So quite genius. Speaking of Mr. OJ, he just texted me. Okay, so just to review here, I'm gonna go do my stupid little Twitter post. Stand by. The 14 followers are eagerly awaiting the Twitter post. Has ES retaken 4404? Not yet. That's gonna be a key level there. Oh, Ernie, I don't know if you're still here, but in case you are, another interesting thing that I saw this weekend was, and this is again probably more for non not these accounts, or you'd have to figure out how to get around that drawdown, probably size smaller. But the Mancini system originated in natural gas and oil. So he built it trading commodities, and yeah, that's where he got it from in the first place. So I thought that was pretty interesting on another alternative there. Anyone who's not familiar and listening to this video, you look up Mancini. You can see his Twitter. I subscribe to his newsletter. It's like $27 a month. I'm not plugging it because I think that his Twitter is good enough. Yeah, it's a really a system right out of the box right there. If you could say discipline and follow that, it's another good guy to check out. He just sticks with straight spoods, but he built that system as well in natural gas and oil. So thought that was pretty interesting. So in a nutshell, it's either he likes bull flags. So, by the way, I'm gonna add this in the personal account. But if we get a break of this doji, setting up for a nice continuation. So be advised there. I'm actually gonna go ahead and throw on a. Oh, there it is. Well, it beat me to it. See what happens here. I just threw on a little micro ES there. Um, yeah. So what his system is, it's bull flags or level reclaims, which are those fake breaks that talk about, or I'm now going to start calling them just based on those patterns to keep it simple. Demand grabs and supply grabs. So when they show you this, because this is a excellent little graphic. So this would be a demand grab, for example, test, fake break, you know, and then same thing to the upside. Even though right now we're in a bull market, so he likes the downside. But basically those and flags, he takes 75% of profits at the first level, which is usually 10ish points away. He'll take an additional 15% at the next level, which is, let's say, another 10 points. And then he will let that runner go until a breach of a significant 30-minute swing low. And for the past few weeks, especially, he's just been printing because we have, been going straight up, and those runners have been really paying. So that's it, though. It's really demand grabs, supply grabs, flags, rinse and repeat. 75% off first level, 15% runner, 10% of runner, or excuse me, I don't know what percentage that is, but half the runner off at the next level, and then just leaving that 10% on. silly little Twitter post is up. Ernie, did you take the runner off? Is it still on? And no worries, still practice. Cool. What does your trilling mechanism look like? Turn it around here. So one of our cool little levels, 365. I don't really have 365, so I'm definitely looking for continuation at 366. Got it. So you just let it rip at break even indefinitely? Cool. That is basically what Mancini does. Except he trails it up just a little bit, but trail is relative, and he's the first one who says that. It's very much based on personal speculation. 43.90. Let's see what we got going on here. Solid rejection at that trend line. NWOG. Let me pull up my boomer dictionary there. Ah, that's not a boomer term. That is actually an ICT term. New week opening gap. Check this out, Ernie. How much of a difference have you noticed in your overall trading since becoming super familiar with those concepts? Obviously, I would think because of how much of a fan you are that they've improved, but how would you quantify that? Oh, you got to run out? Well, sorry, ICT. Looks like no free testimonial on this extremely followed channel for you today. Okay, 5 minutes, you'll be back. Biggest thing is drawing liquidity. When you get back, Ernie, I'm going to ask you about that. In hindsight, that was, I think, a smart close. Let's see. 38.75, where's the high? $52.50. So 64.75 was the original target. Oh man, I would have missed it by a tick. Wow. Let's double check. I don't necessarily think we're turning around, by the way, but just in case. So 15, 0. 63.50, so it actually would have been perfect low close there. $51.50. Yeah. Pretty good sell here. Let me know when you're back, Mr. Ernie. I'm going to replay this in the sim because I am curious about textbook entry today if I had not adjusted at the trend line. Pop into the sim here. What we got going on? What'd you get wrong? Ah, you're close. That I do a pretty steep liquidity run there. I actually have a decently sized position in my cute little ES account here. We'll see if they want to pay us. 4404 would be the target. I will stop if they take out that low. What I'm doing here, I'm checking the sim. I want to see if I hadn't touched my entry, we would have hit the target. I'm pretty sure it would have been almost to the tick. That's what I'm doing here real quick. Okay. See 550. Let it rip. just would have missed it. I would have been so mad. Huh. Then would have gotten stopped out here for half the profits. I really got to figure out that trailer. I know that ideally you want, post my little rules here that I picked up from the prop trading world a while back. Constantly trying to make it happen, but it's far easier said than done. Let's see, where are they? In case you care, Ernie, post them in here. It's kind of, this was the inception of Barb, Fabio, and Friends, combined with that Best Loser Wins book. Where are they? These are the 3 cardinal rules. Formatted like ChatGPT if it was glitching. So the 5-1R and then the 30% profits. Five to one risk reward is I don't really know how you do that with a scalping system, unless you're keeping your stops extra tight. So maybe that's the key, but that's kind of what the stop at 1/2 your best day is pretty easy. But the other two, something I'm constantly working on. Okay, let's move up this ES stop. 79. $78, $75, get a little room. Hello, Mr. Juiceball. Welcome to the party here. Yeah, it's been a pretty nice one so far. I was just telling the ether here, I took profits early today, so I closed exactly where I closed. Get out sim. So I closed at 38, so I did 88 to 38.75. I took profits here first because I was having technical issues, so it was really the second trade was 88 to 38.75. My target was based on pure mechanics somewhere, I think it was like 56.50. Yeah, 56.50. So took profits early, and it worked today, and I would do it again just given that trend line. But I'm trying to figure out, I was working on this as I text you about the various backtesting stuff this weekend, how to, so that 5-to-1R is, again, that was kind of the whole purpose of Barb, Fabio, etc. But really that trailing 30% of risk, I'm wondering where that turns on. So yeah, it's nice that I got out there, but I'm wondering if I probably should have gotten out a little lower just based on that. So mechanical failure that paid. I did. That's why I pulled off. It was right at the trend line, started to get these little doji looking candles, and so I just got out there. But that was more discretion than I think is optimal. So I'm just kind of reflecting on the day and looking where to improve next time. Because the mechanical way that I tested this was stop was at the break of the candle, so we technically still be in it, targeting that white line. Um, so we'll see what happens. Agreed. Yeah. I said on the stream, I'm like, oh, we're a little lower, and we got this first rejection. I'm like getting rejected at Mr. Juiceball's favorite 100 level. Then obviously we popped above, but there's definitely something to it. Your 0-0 theory there. Yeah, I just got your text. Yep, trend lines, and then you have the combined overnight high sitting right there. Plus, you just should have trailed it a little lower. So if it was up, let's see, at its high, right there, 5250. So it should have probably been trailing 20-ish lower. So pretty close, 3250. Awareness and possibility. I like that. I'm with you, especially I was talking about this for a while early in the stream today, but if you look at, you have that $5,000 trailing drawdown. So especially with that, even if you're in the money, um, when you're trailing, you do essentially cut into that. But it's really a more of just trying to systematize. Yes, lots of tacos indeed. It's an interesting day. The internals are pretty darn sure I'm correct in this. Yeah, still pretty darn bullish. So it's just kind of a matter, I think, of stop running. Who knows? So you've settled on 10, 25, 50? Inclined to think you are correct here, Mr. OJ. Obviously no volatility yet. No? Yeah, X a little bit. I agree, Mr. OJ. Didn't even realize how close we're to 15,000. Good eye there. 10, 25, 50. I'm going to check that in some back testing. Do you have a runner at all? Or is it just straight 10, 25, 50, rinse and repeat, go home? And then my second question would be, do you keep the same stop, or do you also give the farther targets more room? Got it. So you just do a 10-point stop across the board? Got it. Well, sir, I like tight stops, and I like those targets, so I will plug that into the little backtesting mechanics adventure, and we'll see what we got. 5-point duck hunt. Yeah, I'm really into the, at least for me, the 9:30 to 11, and then just calling it a day. Keeps it nice and simple. Also looking quite strong. 5 point pew pew. Yeah, especially when we have those channels. That was a really good thing that you figured out there. Agreed, Mr. Ernie. I'm watching the Russell's up 0.64%. Everything else underperforming. I think I'm going to move these ES deltas into there. Build. Where were you short from, OJ? Oh yeah, you told me that. I knew that, sorry. 85, 61. Pretty close to the 85 there. Very orderly. Yeah, I'm with you. I'm watching the spoos on this computer, as well as a Russell. Russell's just filling out a bull flag. Spoos just seems to be stop running along the bottoms here. Draw a cute little trend line. Nasdaq's definitely weak, but I think it's just a rotational component more than anything. Really watching the Russell and spoos on this computer. I'm looking for potential swing trade here, especially given, so I'm looking at internals as well. Internals are ADD still at 1200, VOLD still kind of trending up. We're definitely not looking like we're crashing. We have to complete the little head and shoulder thing going on here, so next level for me is like 75-ish on the spoos. Nasdaq, I don't know. I guess we have to look at that retest of that low from a couple days back. We'll see if we reclaim the open. In fact, I'll trade log, determine exactly what it was. I think it was an open rejection reverse, if I recall correctly. Yeah. we reclaim that, go ahead and conclude the lovely video for today, because we'll probably just then chop between this low here and that high. Keep in mind, anybody listening, I think it's 90%. I'm going to check my stats right here. Correct myself if I'm wrong, but I think it's 90% of daily highs and lows occur in the first 90 minutes regular trading hours. So we are near that Euro close, as Mr. Juiceball loves to watch, and so maybe we'll get one more flush here, but I think the low is imminent. The IB rule as well, 88% of the time we close below that IB low, so the high may also be in, so we'll see. Okay, so Europe is closed. That 90 minutes has elapsed. I would expect one more push at the bottom here. We're not seeing that speed and aggression yet. Gotta give him some time. Define Q. Okay, we'll see. Okay, now we're getting some speed and aggression, especially in ES. Okay, NQ's catching up. Russell, big, yeah, the Russell's getting the majority of it, breaking out of its, potentially breaking out of the flag. Might be party time, we'll see. Give it a little longer, like I said. I want to see NASDAQ reclaim this 1520 area. And then I think we'll enter the chop fest and we'll conclude this nice little routine briefing once, if and when, I should say, they do that. So as we look at the rest of the day here, just to review, choppy open, neutral inventory. We do have, so I don't make a note of this on the warm-up document, yet I do mention it when it's relevant. Internals are pretty darn strong today. And even on the sell-off, ADD has stayed above 1200. Remember, 1500 plus or 1500 minus, depending on the direction, is that strong trend look. So be watching that as the day goes on. Yet, really, we do have that chop look. So the bulls will have to do something spectacular. They'll also have to unwind that IB. So remember the IB statistic, 88% of the time, a 5-minute candle close below that IB low, which we had, does lead to the, well, let me make sure it did before I say that. Yes, we did. So we have the candle close below that IB. So 88% chance the high is in for the day. So be aware of that. And these are the key levels. You can see this document description of the video. The main ones are obviously going to be this cluster 355 to 366. And we're not really near any of those. So once again, choppy open. That's usually what happens when you're not around these key levels. So we will see what happens there. We are kind of bouncing, I guess, tentatively in that 360 handle. So you'll say maybe there's some demand there if you want to make a case for that. So that's what I got going on. It's been a pretty nice day, pretty chill. Got a gift from the gods for that trade. So I didn't have to work too hard. At least in this account, I have been trying to get a swing position going here, or not trying, but been slowly putting together a swing position here. 384.50 is my average price on that. I am using the ES, and I may move that to the Russell, but that's just a swing position, so not really relevant to what we're doing here. But I think we are in for a move back toward that 44.05 level, so nothing fancy there. I'm just looking for 20 points. Again, it'll either work. I'll get stopped out at 71, I believe is my stop, or it'll work and I'll leave that runner. The style of that is just for Mancini. I've mentioned that a couple times as well. This video, just go to his Twitter, Adam Mancini. You can see his style as well there. So, yeah, pretty chill, pretty easy day. I thank everybody for hanging out, and I thank you for your attention. I'm going to package a newsletter up right here. If you've been hanging out, it's not really going to be much different than what we've just been talking about. So besides that, all important resources, as always, are in the description of this video. And I would appreciate any engagement in the comments there, or on Twitter, or wherever you can find the Routine Trader. Those are probably the two best spots. So if you just find this information fun and useful, if you made it through this entire briefing today, please give this video a thumbs up. That helps that YouTube algorithm, and I would appreciate that. And appreciation all around. Thank you for your attention. Stay classy till tomorrow.